Hey, what's up, YouTube? Welcome back to the channel here at AB Trades. I hope you guys all had a great weekend and you're ready for another busy week in the markets. Last week was pretty crazy with all the volatility that we had and the overnight recovery and all the liquidation that was happening. I mean, it was actually insane. And for those that are in the Discord, you all know that we actually had a pretty good read on the markets and we were able to stay afloat despite all of the crazy things that were occurring. As always, every Sunday, I like to go through around 15 or so names that I like and share a bit of my thought process behind each pick. I'd like to give you a reminder if you'd like to receive my watch list before I post my YouTube video, please give me a follow at X at AB Trades. And the reason I do this is so you have a form of homework to prep. So now you have the watch list that I will be reviewing in my YouTube, and you can go in and chart and do your own preparation and then compare your results with mine to see how you did. I think it's a fun little activity to kind of train yourself to see if you can see what I see. And the more you start to excel in that, the better that you potentially can become. I also released a checklist market guide, and I remind you guys every weekend about this. Make sure you download it, make sure you use it every time you go into a chart. Have it out with you. How many of these checklists can you answer and or cross off, right? The more confluences, the better. Remember, none of this is financial advice. This is just me sharing how I am approaching the market for this week. Hopefully, it gives you a few ideas to add to your own. So let's go ahead and grab your coffee, pull out your charts, and let's dive right in. So to start us off, this week we do have, it's not too crazy of a list. It's actually a bit condensed with like 10 or so names. But to start us off, it's like a triple threat. I really like how some of these mineral and mining names are starting to shape out again. And Alcoa Corporation is kind of doing something very similar. As you can see back here, back in, what was this? Late October, you kind of see how price goes through a very similar development. Obviously, not in terms of how you are like creating liquidity and absorbing it, but the build out was around the same length of time, around 20 to 25 days worth of consolidation, going for some sell side raids, some manipulation highs until the overall breakout. And you all know that I love when we have a nice form of LRLR where price is being compressed into one direction only because of how you are hunting those liquidity lows. And a lot of the times you get this kind of engineered liquidity into a very nice refined form of demand or supply depending on how the LRLR is creating. And so when this LRLR is coming back down into a point of confluence, right, you have your previous week low sweep that then is followed with a gap up, then rejected at a daily OB, but it came into that really nice rally base rally. So this base here that prepped Alcoa before the next like what $10 move, we are now back to the absorption phase. And remember, price delivery works in four ways. So I believe this kind of consolidation slash absorption is getting ready for the next expansion. And my view on this is as long as Alcoa can stay above 54, I would like to see if we can get some kind of entry to then trade this back up into 70 plus. Now, if we lose 54, I do think this goes for a sharper correction. And so one thing we also need to be cognizant of is, can we get a 4-hour reclaim of 60.23? Because as you've seen so far, each one of these lower highs, which is creating our LRLR potential if we do get that buy side raid, has also prevented price from continuing higher, right? So similar to here, it's trying to do it again. So 60.23, or if we can get some kind of entry on the 4-hour, right? Because the 4-hour has now supportive confluences of a gap up after a previous week low sweep. So we know that if price can develop above 56 into like 59, can we get some kind of retracement, retrace, pushes up, gets that higher low confirmation, and then goes for that full on expansion? That's kind of what I would like to see if I can get some kind of entry. Otherwise, I'm looking for price expansion through 60.23. And the reason I bring up Alcoa and I called it the triple threat is because CLF also has very similar structure. The only difference between this one is Cleveland Cliffs actually came back in a discount and another previous week low sweep that was then pushed back into the range. Then I look at MP. MP is also very similar. And I like MP too because you have not only so look at this confluences here. You have your breaker that then caused the structural shift on the lower time frames. Right, so this was an LTF MSS. Then you expand, sweep a really nice high, then come back for a corrective retracement that is still lining up with the overall external structure. So now we have a lower time frame breaker, we have a higher time frame gap, we have some nice engineered liquidity into our golden pocket, previous week low sweep that then followed with a gap up and displacement. Sorry, that was my water bottle. So this one has really clean structure as opposed to the other three. I would just say it's not as strong as CLF or AA, but it has the best risk reward. Next up on the list is HD, and this one's like a double whammy because HD and low, I think, have been on my weekly watch list videos for like the last 2-3 weeks, but they just continue to look good. So I want to continue to trade them. Now, what I'm looking here is we did get a previous month sweep, and we are part of this really nice broadening. The only thing is like this can still build out. You can still get some kind of delivery down before higher, but overall what I'm looking for is I'm looking for HD. Even if you get a dip down to like 350 360, I still think it's buyable because it's part of this overall structural broadening that kind of confirms the overall intent of what price wants to do, because you go from lower high to this lower low to then higher high, and then you go for a nice little internal raid that then delivers back up. So I think while we stay above 360, I think HD is trying to build out for a move up into 397, 400. And I just really, really like the development of this, right? You go for those little daily raids, but then push back up. Daily raid, push back up. So I personally believe the best entry for HD comes in on one of those like little raids. But I think it wants to continue this overall structural build. Right? Here, here, here. Maybe. Or do you stop here? All right, there's so many ways to approach this. I just really think HD's overall internal buildup here of the overall higher time frame order flow wants to target up into 397. So I would just look for some form of entry, and then low is kind of just the same type of trade, just a little bit stronger. So keep an eye on your home builders and miners. AMKR again has some really nice pieces of confluence here. We had a really nice overall higher high that was then redelivered back down into a supportive gap, paired with our overall discount of our last known swing low into our swing high. And you know that when we come into discount, it's not just about, oh, we're at the higher low or lower high of the current trend. You know what matters also from there is, how does price deliver? Are we displacing out of discount, or are we displacing lower through our golden pocket in 786? So when I come here, not only do we get a nice gap fill, the next day has a really nice inside day that then gaps up with a full body close displacement candle. So now what I'm looking for is if we can get some form of entry on this 4 hour, because if not, look at this really clean LRLR that's sitting up here. Look at how all of these previous high wicks here were never taken out, and they never took out the previous one. So if I can get some kind of entry, I would like some kind of dip and rip that takes me back up into 55. Super clean layout to this. I love the weekly look. Super clean weekly. I mean, look at this weekly, guys. not only was this a weekly, but you also came back into a weekly breaker paired with a gap and OB and fair value gap. Like, guys, this is a really nice weekly rev candle that I think if it can continue to build out a little bit more, we could target that 55 high. The only problem is you do have earnings on Monday. So we would have to see how this plays out. But man, this looks so good structurally wise, right? Which anything can happen. Next up on the list is a pretty simple chart here, and it's FTNT. I believe this is cloud related. I'm not entirely sure. But what I like about this is how you have this really nice absorption of price into a gap down manipulation low, which is also a broadening low. And then you pair it with a gap and a gap, right? You run through all of this really nice liquidity. You change the little structure that it had on the 4. I'll show you, look. You go from here, 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 here to here, right? So when I draw this out, you can clearly see the type of trend it's in to the type of trend it changes into, right? And so now that we have that, I now have a valid swing low to swing high to understand that where price can retrace to could be a potential higher low into the discount of the new trend. And you can so far see the reactions post earnings, which is also really good to see. So now we have a gap confluence, we have our discount confluence, we have a nice little daily raid confluence that wicked back up. So for me now is like, if FTNT can stay above 76, can we now develop into the new buy side of the curve that eventually trades this back up into 90 plus? Earnings are out of the way, so you could potentially even grab like a 320.90 call, or even in April or June to see how long this needs, because now the risk is literally $4 for 10 plus if this is going to be where that weekly changes. So definitely a really nice daily chart, and you have confluences against this. If you get a daily close under 76, then that would invalidate, and you probably target down to like 67, 66. But this was a pretty simple chart with structural evidence that price is trying to deliver differently. And so I like the overall narrative that we're building here. NXT. So this one's also pretty straightforward. And I'm not trying to like take up too much of your time, especially with these shorter watch lists. Sorry, y'all, my throat is just a little parched right now. I'm not sure why this happens so much when I do these videos. I think it's all the talking. I don't know. Anyways, so this one is at a all-time high breaker paired with a really nice post-earnings power gap. And I really like this because when I go into the 4-hour rate, you have a really nice sell side rate here that then is followed with a gap up. So it's like you go for a nice sweep of lows, but then the next day you have a crazy gap up. That to me shows me really good indication of what the trend really is. And buyers are definitely leading the charge here, especially when you're getting what 1, 2, 3, 4, 5, 6, 7, 8, nearly 2 weeks of price consolidation above your previous all-time high breaker. Now you have it lined up with a power gap. This looks really freaking good. So now we have a gap up to utilize. If this doesn't materialize immediately, I would like some kind of little dip and rip as well that we can then target up into 135. Really good external buildup here relative to a really nice PD array that we have now paired up with a major catalyst gap. So as long as price can continue to develop above this gap, which is like 107, 106, I want to see NXT now start leading this momentum back up into 135 plus. Nike, I truly believe, and I know this is not what people want to hear, but I truly believe Nike is setting up for that buy side of the curve. And I really like how you had this gap and redelivery, especially out of discount. You finally got that really nice sweep down. Basically, now we're in a double inside day. All Nike needs is a close above 65 on the daily to then start hunting back up at a 70. Otherwise, we can still be at risk for one more like driver down. But I do ultimately think anything above 58 is setting up for a really nice higher time frame buy for Nike. Because look at this weekly, guys. I can remove all of these drawings and look at how you have this really clean LRLR being built on Nike, where you're only taking out those previous week lows. You're sweeping them, but then you're coming back up into the range. And what you also have here off of a potential broadening low is this. And if you take that monthly expansion from a monthly perspective, look at this. Look at where this is all developing. So the risk really is like just staying above 58 because it's setting up a really nice daily development, in my opinion. Next up on the list is GM, and this one's also a pretty straightforward chart based off of the 4-hour. So we know that the 4-hour likes to go for little stop hunts, just to like similar to what happened here. You had similar buildup, right? Then you break down and then reverse. So I'm trying to see if we can see something similar here on GM. I would like to see if, I mean, as long as we stay below 85, like 50, if we don't get any acceleration through this, then I do think we can set up a nice manipulation low, similar to how we did over here, that then changes the structure and then runs back up into 90. Now, the only way that this changes is if we get an immediate push through that like 85, 70, 86, because then that sets up that -2 push, right? And all I did was I took the manipulation from this little push up, sweep, that then changed the overall structure here. Because when I zoom in here, you do this. You put in a nice little higher low here. Whoops, should be this one. Right, that then develops. So I think GM is trying to potentially do something similar where we can put in a nice little manipulation that then expands up. Similar to how we did over here. Now, if that doesn't happen, we need a nice push back up through 86. But this is just pairing the overall structure of the chart, right? And you have this buildup, you have that weekly sweep that fails, similar to here, weekly sweep that fails, and then you kind of get this little build out that then breaks out further. So I would kind of like to see something play out. Build out that then breaks out further. Only way that this doesn't happen for a true discount is if that 86, 87 gets reclaimed. Next up on the list, and this is probably one of my favorite charts, is ALAB, Astera Labs on the weekly. So we have a nice weekly rev that has also been respecting our last all-time high breaker before this most recent one. And when I take this weekly low, this weekly swing high, you now have a really clean discount at your previous weekly breaker. And you came off of a really nice little weekly raid here that accelerated back up. Now, unfortunately, I do think this is going to be very ER dependent, but it's really hard for me to not try and trade this at all. So I'll probably be looking at picking up some like 200 leaps. If this is going to be the overall weekly development, I mean, man, it's hard to say, but if this does trade out, if earnings weren't here, I would say that this runs straight to like 230, 240. But because we have earnings, it's, you know, it could go either way. But man, this setup is so clean. Look at this weekly chart, man. This weekly chart is not talked about enough, right? I mean, this crazy compression, if this compression trades out to be true, as you know, what I like to talk about, price tends to trade out the same way it traded in. So if we trade it out down, up, then we're most likely to trade out the same way, down, up, right? So I'll definitely keep this on watch for some leaps, just in case, to cover for these earnings, because if it does trade out, this could have a very, very aggressive $40, $50 move, you know? So definitely one to keep an eye on. That weekly chart is phenomenal. And when I talk about confluences, my God, this has it. This has it. Next up on the list is BABA, and I do think similar to how we traded it the last time, we finally now got a really clean corrective move here. So we came back into our true discount of this overall structural change here. So you go from here to here to here, which is your manipulation leg that then expands out. And now we're potentially back in a discount off of a golden pocket gap inefficiency. And you have your little daily MA here. So like 4 or 5 pieces of confluence for BABA to potentially shape out here into the next higher low to then develop back up. You can also take into account this manipulation here as you swung up and then swept those lows as our form of deviation to project and map out where BABA can trade to next. So as you can see here, the -2 and -2.5 pretty much put you back up into those failed highs, and they're pretty much relative equal highs. So you can also try and maybe grab some Junes because it is China and this can fluctuate a lot. It's very, very volatile. You can have some crazy gap ups and gap downs, but you have some pretty good risk reward here against this gap initial breaker that then changed into that new development of price. So this could be the first potential higher low of the new trend. So definitely something to keep an eye on as you run into earnings. Really, really nice structure here. And I do believe if you map out the extensions of this, give me 1 second here. I do believe if you map out, whoops. Wait, what did I just do? Did I do this correctly? Oh yeah. So if you do map out the targets, look at where the 0.27 is, right? It's in line with that -2 and -3, which is technically from structural theory where your next higher high would be 185, 190, which could be ER dependent. So you have some pretty good confluences to see if BABA can trade back into that 180 plus. Next up on the list is Moderna, a favorite of mine because when we last covered this, we covered this down here at the low 30s, and we discussed the potential of the weekly accumulation curve coming off of a really nice weekly sell side raid that also set in your spring, and it traded out really, really well. We got up into post 50. I mean, our overall target was 50 and we got as high as 55. So now what I'm looking at is we finally got some really nice retracement. And you guys know that when I'm looking for these retracements, I'm looking in particular for them to build what? If you said LRLR staircase compression, you are 100% correct. When I'm looking for retracements, the best retracements from my experience are the ones that create liquidity like this. When you absorb both sides, when you're so compressed, you create really compact movement that makes it really hard for premiums on either side to materialize. And I think this is coming back into a nice area to rally back up into 60. Granted, this is just the overall structure of the 4-hour, but because we do have earnings, we can also take into account the overall weekly leg, right? So the weekly leg would put us into like the low 30s area again. So 2 scenarios. We respect here and go, or earnings takes us lower and becomes a really nice viable dip that eventually trades out further into the year. Overall, depending on where we dip and how we dip, I still think Moderna is setting up for 60 plus into the next quarter. Also notable names to make sure you keep an eye on: Eli Lilly and XLY. I'll cover XLY briefly. And it's just really clean LRLR into your weekly discount with a potential gap overhead. So maybe you look for some XLY names that you like. And yeah, that concludes our watch list. I hope you have been enjoying these. I've been doing them for a fair amount of time. And if you have, just show your support with subscribing. Tell your friends, family, anyone that you think might be interested to come and check my channel and help me get to my 5,000 subscriber goal. Other than that, hope you guys have a wonderful trading week, and I will see y'all next week. Peace.